Howdy there, folks. Welcome into today's video. A lot to get into in this one here today, folks. We're going to talk about Tesla, obviously, in this video. The move down here today, Tesla, about 10% move down. You'll hear my perspectives on that. There's something interesting setting up there. Let's just put it that way, okay? We're going to talk about some things going on in the market. Right off the top here, I want to speak about, we're going to talk about bear trap, okay? I think it's an important subject. And coming off of the year we came off of last year, we saw bull trap after bull trap. Are we ending up in a situation where this is a bear trap now at this point in time, right? And so, hope you guys enjoyed today's video. As always, I appreciate everybody joining me. Thanks for being subscribed. Let's get straight into this one here today, folks, okay? So if we rewind time, right? November 2021 through November 2022, it was a bull trap after a bull trap after a bull trap. Every single time you thought the market was coming back, stocks were coming back, we might have finally bottomed, right? The market went lower and lower and lower and lower and lower. It was incredible, right? We couldn't get a break anywhere. And it just seemed, it was vicious. I mean, we watched stocks go down 40, 50, 60, 70, 80%. And I'm not just talking about some small cap random stocks. I'm talking about some of the biggest companies in the world making moves that we've only, in the past, let's call it 30, 40 years, we've only seen stocks really make those sorts of moves twice. One was a great financial crisis. The other was a tech bubble. When you have super famous companies going down 40, 50, 60, 70, 80% all over the market, right? It was absolutely brutal to go through that. And so we had bull trap after bull trap. Every single time you bought, your stocks went lower, right? And somebody like myself, I experienced that every single time I would buy stocks. Just, a few days later, a few weeks later, they're lower than where I bought them. And then I would buy more, and then they were even lower. And then I would buy more, and they were even lower, right? It was vicious to go through that, absolutely vicious. I mean, imagine, you could have pulled up almost any super famous tech stock during this time period, and almost every single time you could have bought it, it just ended up going lower and lower during that time period. It's absolutely brutal to go through that. But now we have something very intriguing going on in this market. Let me show you this here, okay? This is the market for the past 6 months or so. And what we're seeing so far is just a bear trap after a bear trap after a bear trap. And we've seen basically upward momentum in the market overall for over 6 months now at this point in time. It's not like this is a short time period. If it's 6 days, 6 weeks, who cares? Big deal, okay? But when it goes for 6 months plus, now you start to ask yourself, is there some sort of bear trap setting up here, right? And you think about everything that's transpired during this time, right? The Fed keeps raising rates during this past 6 months or so. Inflation's still high. Yeah, it's coming down and things are starting to go in our way in terms of inflation, but they're still high. They're still high numbers, right? We had obviously Silicon Valley Bank failure. So you had systemic problems and risk out there. And despite all of that for the past 6 months, the market ultimately has just ran right through it. And it's gone up and up and up. And this is despite overall fund managers being extremely negative on the market, and retail not being in the great position, and yet we've just marched higher and higher and higher, right? Very intriguing now at this point in time when you have all those sorts of dynamics, and you have to start to ask yourself, do we have some sort of bear trap going on here now at this point in time, right? And I think the biggest stock that you could possibly look at that has been in my opinion, the quintessential bear trap has been Nvidia stock. If you go back to the stock, 6 months ago or so, it was a $110 stock or so. And every single time period, you thought, okay, it's going to start going down now. Shorts have loaded up on short options on this, obviously put options, right? Shorting the stock straight up, saying, Nvidia, it has to go lower. It has to go lower. It's going up too much, right? But the problem is they were saying that here, and then they were saying that here, and then they were saying that here, and here, and here, and here, and they're still saying that now, right? And meanwhile, the stock has just gone up and up and up. This has been the world's largest bear trap. And when I look at something like this, you got to understand with a stock like Nvidia, you're playing with fire with a stock like this, right? I mean, you look at this company, it's in the forefront of so many sectors. And I don't know how many people, I think a lot of people short these sorts of stocks and buy put options out of ego more than money. Because when you think about a company like AI, like Nvidia, I don't even think people know what's going on with Nvidia. Nvidia is the main chip supplier if you want to do anything artificial intelligence related, okay? By far and away, they're the dominant player. Huge market share, like overwhelming market share, okay? And you got to understand, one of their chips in relation to AI sells for $10,000 to $20,000. One. And you need tens of thousands of these, if not hundreds of thousands of these, if not millions of these in the future, okay? And they're selling these for $10,000 or $20,000. Now, will they always be able to command $10,000, $20,000, if not $100,000 for these chips? I don't think they'll always be able to command that. But the bottom line is, for the next many years, they're in the forefront of this, and they're going to be able to just rake in crazy money. So even if Nvidia's other businesses are a little slower here in the short term, you just got to understand this AI thing is going to be pretty darn epic for a company like Nvidia. And there people are out there buying put options on this stock, short selling this stock, when this company's commanding $10,000, $20,000 for a chip. And I don't even think they're looking at that. And I'm like, dude, you start running the numbers on what it takes to have something like ChatGPT continue to scale, never mind every other company that's trying to work on AI right now. And you got to understand, like, Nvidia is going to be making silly money, and we're probably at the pregame stage of AI right now. I don't even know if we're in the first inning. If we are, you can call it the first inning. That's a long game there, right? So that's just, I don't even personally own the stock, but I got to say, like, you're playing with fire. You want to short something like that. You want to buy put options, and people are just losing their face on that stock again and again and again. And I'm like, people aren't thinking with their brain. They're saying, oh, it's at a 60 forward P or whatever. Well, first off, who knows what their forward P really is, right? It could actually be lower than what people anticipate. The other factor is you can't short a stock. You can't buy put options on a stock because it's at a certain valuation. Like anybody that's an expert on short selling companies and buying put options will tell you that. You don't short ever based upon valuation. There has to be something other much more substantial going on for the company that's going to go wrong for the company outside of valuation. If you short just on valuation, it's always a bad short because different companies are going to command different valuations. And Nvidia might command a 50, 60 forward P for the next 10 years for all we know, if this opportunity for AI is really as big as it could be for Nvidia, right? Think about that for a moment. Now, Tesla. Let's talk about Tesla for a moment, right? Obviously, the talk of the town here today, down about 10%. Tesla. We were down just in the public count, $29,300 on good old Tesla Tesla here today. We're down to our last 590% gain on Tesla Tesla, man. It's getting rough out there in regards to the good old Tesla Tesla, right? Now, in regards to Tesla, right? It's interesting because sometimes it just pays to back up a little bit, right? In zoom out, right? Because I know all the shorts are celebrating, popping champagne bottles today because the stock was down 10%. The stock's up 50% year to date. 50%, that's after today's 10% move down, okay? If you look at the stock on a 5-year basis, it's up 742% on a 5-year basis. And since the company went public, it's up 10,159%, okay? And so everybody gets very caught up into these short-term things that happen with Tesla all the time. Short-term moves, very volatile stocks, always been a very volatile stock. And, at the end of the day, it doesn't really add up to much with this company. The bottom line is this company is, a game changer. They've been a game changer, and they're continuing to have the pedal to the metal to such a crazy extent that I don't even think people realize what's really going on here and what Elon Musk is even up to, okay? Did you know that 2022 was an awful year for autos, okay? I mean, absolutely awful. Now, the automakers were hoping 2023 is going to be better. We'll see what happens with that. I'm not so convinced 2023 is going to be that much better. Last year's new vehicle sales in the United States were the worst in more than a decade, okay? So basically, we're in a time period right now where auto sales are extremely weak. Extremely weak. If we want to pull up a chart of this, I can show you this, okay? This was last year. Now, this is their projected 2023 numbers. We'll see if that happens. I'm not so convinced, okay? We'll see. This was the numbers actually last year, right? So you have to go all the way back to 2011 to find numbers that were worse than this, okay? And so the only time period in recent history where we've had auto sales be that weak were 2008, 9, 10, and 11, right? In the great financial crisis when you had unemployment around 10%, 9% or so, right? And so this is a fascinating thing because what do you think is going to happen? Just think about this for a moment. What do you think is going to happen when auto sales get back on track? It might not happen really this year, but in 2024, 2025. Well, then Tesla's going to be in a prime position to raise price if they want in a market that is accelerating in terms of its growth, right? And what do you think is going to happen when the companies bring down cost of all their vehicles in a substantial way, and all of a sudden they start upping their price again if they want to go that route, right? Gosh, what do you think is going to happen with margins and profitability for this company? What do you think is going to happen with net income for the company, right? What do you think is going to happen to operating margins for the company? And these are things you got to think a little bit forward. And I think Tesla investors are pretty good about thinking forward, but I think a lot of people that aren't in this company, they don't think about this stuff a little deeper. And it's like, I think sometimes if people just sat around instead of being on their phones all day and time and just plotted and just thought about stuff, I think they would begin to understand what's actually going on here. And that this is a company that, sure, in the short term, they're sacrificing their margins, but long term, as the auto market, whenever it gets back on track, which it will, and I don't know when that is, once again, it might be next year or the year after, but when it does, Tesla's going to be in a prime position that if they want to take margin at that time and have record margins, they can. And there's also a false narrative out there. I think I even saw somebody on CNBC saying something today that like Tesla's demand is weak. Based upon what? You got to base upon what the market is for that given time period, right? The bottom line is Model Y was a best-selling vehicle in Europe in the first quarter. Is that weak for the best-selling vehicle? If that's weak, and I don't know what's better than them. Nothing. Okay? Model Y was the best-selling vehicle in the United States in the first quarter, if you exclude pickups. The bottom line is Tesla's demand is ridiculous. That's fact. That's not an opinion. That's fact. When you're number one and you came out of nowhere and you're slapping Europe, you're slapping the United States, I mean, what else can you say in regards to that, right? Check this out. Model Y last year was the sixth best-selling vehicle, period, in the United States of America. Sales were up 32%. What about Tesla's biggest competitor? What were their sales at? Oh, that's the Honda CR-V. Their sales were down 34%. Tesla is making a move here, not based upon they have no demand. They're making a move based upon they're going to want to absolutely put their foot on the neck of their competitors, and they're doing just that. And their internal combustion engine competitors, which they all are, right, are feeling the pain in the biggest way possible. The EV companies can't even really compete with Tesla. I mean, they're in a whole different league. And the internal combustion engine companies are getting absolutely wrecked. I mean, here you are having Model Y outsell CR-V. Meanwhile, CR-V's obviously losing massive market share, and Model Y is gaining massive market share, right? And so even Tesla could easily rest on what they've accomplished here in their positioning, but they're saying it's not enough. We want more. We want more. We want more. And oh boy, okay, that's a serious situation. Now, the best-selling vehicles in the United States of America are trucks, if you didn't know, okay? F-Series sold 653,000 units. That was down 10%, by the way, from 2021, which 2021 still wasn't even that great of a year in terms of auto sales. We've kind of just, ever since Rona, we've been in a weak auto sales environment, okay? Silverado sales were also down on the year, 513,000. Watch out. Cybertruck's coming. Now, some people might think, oh, Cybertruck, it's no competitive threat to F-Series. No competitive threat to Silverado. This is the same thing they said about Model 3 and Model Y. And look who's dominating. Look who's dominating car sales now. Model 3. Look who's dominating SUV sales. And who knows, maybe I wouldn't be surprised if Model Y becomes the number one best-selling vehicle in the United States of America. I mean, it's a possibility, right? Look who's dominating there. And so to write off Cybertruck and be like, oh, it's going to be no competitive threat to F-150. Oh, really? The most famous vehicle in the history of mankind is not going to be a threat? Those might be famous last words. That's all I have to say about that. Those wait to see Cybertruck. Wait to see those numbers as it starts to scale in 2024 and 2025 especially. Oh my gosh, okay? And just understand that Cybertruck could, keyword is could, be the number one best-selling vehicle for Tesla in the United States of America. It could outsell Model 3 and Model Y. It could outsell them combined. It's a possibility. When you look at what F-Series does, and you think about what Cybertruck's going to do for sales numbers, laugh it off all you want right now. But I'm telling you, the folks that are not taking this serious are in for a rude awakening. That's all I'll say about that. Rude awakening. Because, those boys need to watch out. That's all I'll say about that, okay? So, in regards to good old Tesla Tesla, this is a company that in the short term, it looks bad. But it depends on what angle you're looking for. Market share expanding rapidly. Sales expanding rapidly, way outpacing the market. So if you're talking about market share, if you're talking about sales, it's game over. If you're talking about margins are going down for the company. That hurts them in the short term, right? But their margins are also, let's call it, much better than their peers in the industry. Their EV competitors are losing a fortune. Their EV competitors you can't even talk about those companies, okay? It's a joke. And the internal combustion engine companies are losing, A lot of these guys are losing $10,000, $20,000, $30,000 plus dollars per vehicle they sell that's an EV. How do you compete with Tesla? Literally, how do you compete with Tesla? You can't. You can't compete with Tesla, and I just don't think that enough people have wrapped their minds around you can't compete with what Elon Musk has built and that team has built. The EV companies can't compete. They're losing a fortune. It's going to be a long time before they can even hope to make a profit. And by that time, Tesla's market share is going to be ridiculous. I mean, their market share is already ridiculous, right? But in terms of their sales volume, that's going to be insane. Their EV competitors, those companies, I don't even know if they're going to be alive. Literally, I don't even know if they're going to be alive. Rivian, I hope they make it. It seems like they got some quality products out there. The good news is for them, they got the Amazon backing, so hopefully Amazon can get them through this time period, right? Lucid, they got the Saudi backing, so hopefully they can make it through, but they're trying to sell cars at like $150,000, $200,000. Good luck with that. And then all those other companies are basically fighting for their lives that they've already gone under. So, I mean, it's just, they're impossible to compete with, and Elon Musk has got his foot on their throat, and that's the bottom line with that. Okay, so good luck. Good luck, everybody. We'll see, okay? Alrighty, next thing up here I wanted to show you guys that I thought was important is this is a fund manager survey. Fund managers are extremely heavy overweight bonds right now versus equities. It's really fascinating to see this because last time you really saw something like this, it was in 2008, 2009, okay? Now, obviously, we don't know how extended this can get, right? We could go even more overweight bonds. That's something that's a potential, right? But it is fascinating to kind of show you the time period we're going through, right? A lot of it reminds you of kind of that time period, except for unemployment, really. We haven't seen that major unemployment tick up in a major way, right? And we haven't seen a real estate crash in the sense of pricing, right? Seen a real estate crash in terms of home sales. Those numbers have fallen off a cliff over the last 12 to 18 months. But in terms of pricing, that hasn't really fallen off a cliff. So, you've had a lot of the same signs of like what happened in 08, 09, but just it had, things are different, okay? You even had consumer sentiment last year go far lower than what we had in 2008, 2009, right? So it's been a fascinating time period. So the bottom line with this is, this is more of a bullish sign for equities, in my opinion. When you start seeing something like this and how overweight people are on bonds, fund managers, that makes me feel very comfortable about, let's call it equities over the next 36 months. Over the next 6 months, that's anybody's best guess. But over the next 36 months, oh yeah, I feel pretty darn comfortable being in stocks. Let's put it that way. Because when you got to understand, when folks are way overweight bonds, eventually that money's going to come flooding back into the stock market, right? And that's the thing, there's going to be so much buying pressure that's going to be out there over the next few years that I don't think people are even taking into account right now. Oh my gosh, right? ELF on a shelf hit another new high here today. It's now up over 1,200% for us now at this point in time. It's been fun to watch this one, man. It's getting close to $100 a share. $100 a share, man. It's been fun. And to be a buyer of this one under 10 and now see it at nearly 100, it just goes to show you the run at a great company that can execute like that. It goes on, right? Now, Patreon portfolio, I'm having a lot of fun building out this portfolio. And for all you guys that are, let's call it in the stage where you're under $10,000 invested, just enjoy this stage you're at in building your portfolio. To me, it's one of the most fun things is like building a portfolio from the ground up, right? Which we started this portfolio in January and just been building it. It's fun. It's a lot of dang fun to build a brand new, fresh portfolio. And I remember years and years ago, I used to play a game called, it was called Clash of Clans. And I built up my base super strong. And then I kind of started getting bored with it, so I started another base. And it was so fun, like building a new base from scratch in that game. It was like so fascinating and so much, it was just like a thrill of that, like starting from the ground up and doing it this way and maybe smarter and better than you did it before, right? And so with the Patreon portfolio, it's been fascinating to do that. Now, all you guys that are building out your portfolios, I don't care if you got $10,000 to your name, $100,000, $1 million, whatever, okay? Keep this in mind. Diversification, okay? I don't think we talk about it enough. It is so important to stay diversified. And if you look at what I'm doing with the Patreon portfolio, right? I'm building out a very nicely diversified portfolio across many different sectors and industries. Not getting too overweight in certain positions, right? My top 2 positions make up about 30% of my portfolio, and I feel perfectly comfortable with that. And you got to keep this in mind. Like the problem, what happened to a lot of people in 2022 that really shredded them up, to be honest, is they invested way too much into 1 or 2 or 3 stocks instead of building out a great portfolio, right? And that can get you in a lot of trouble because all it takes is one or two stocks not to work out and you're devastated, right? Options, another thing that destroys people. Margins, another thing that destroys people, okay? Margin options are easy no's. You can easily say, I don't even want my account to be a margin account if you don't want that, right? You can easily say no to options. Like those are easy no's. Diversification trips up a lot of people because you're building out your portfolio and sometimes you get way overweight one stock or two stocks or something like that. Make sure you're staying, I'm telling you, diversification is what gets you through those bear markets, right? I got hurt last year, especially, from basically November 21 to November 22, I absolutely got very hurt in the market, but I made it through, made it out to the other side. Public account got hurt, but made it out to the other side because I was diversified and I was across many different stocks, growth stocks, value stocks, dividend stocks. And that's what gets you through that bear market. And then you can position also for upside in a bull market as well. And I think that's just what's missed so many times. People sometimes think there's only 2 or 3 good stocks in the whole market. I'm telling you, there's so many dang good stocks in the market. Look at 2009 through 2019. Look at how many great companies there were during that time period that went up hundreds of percent, thousands of percent, 10,000%. I mean, it's extraordinary. So don't ever think you're limited to 1 or 2 stocks, because I'm just telling you, all it takes is one of those to be wrong. You're wrong about, and next thing you know, your portfolio is leveled, your portfolio is devastated, and you're in a bad financial situation. Don't end up there, man. Keep diversified. Growth stocks, value stocks, dividend stocks. Don't get too over-invested into 1 or 2 stocks. It's much better to be in a position where you say, gosh, I wish I would have invested a little more into that stock, than a position of like, oh my gosh, like, why did I put that much in the stock? I'm telling you, why did I put 60% of my portfolio in as stock XYZ? Oh, look at this. This stock hasn't worked out. It's, down to this price, blah, blah, blah. I mean, I can tell you it's a lot better to be the guy that's like, I wish I would have put more in that stock. That's a way better feeling, I can tell you that much, okay? And so stay diversified out there, folks, okay? And by the way, in the next 24 hours, I'm making moves in the Patreon portfolio. Actually, tomorrow I'm making moves in there. If you want to see what stocks I'm buying and selling in the Patreon portfolio, check out the pinned comment down there. Also, just so you're aware, I might take away the $10 tier. We have a $10 tier right now, and I might just only have the $19 tier start next month. So if you're interested in joining the Patreon, I would get in there ASAP, because I'm probably going to get rid of that and just have one tier, and that will be like the $19 tier or whatever as far as that goes. So appreciate everybody joining me as always. Much love. Thanks for being subscribed, and have a great day.